Welcome to the Pro Project Books podcast. I'm Darrell Brown, your host and guide on this journey to demystify the world of bookkeeping and project accounting. As business owners, especially those managing project-based firms, bookkeeping is often viewed as mundane number crunching, but in reality, it's the backbone of your business. Whether you're directing a major ad campaign, managing a complex project, or producing a landmark event, effective bookkeeping ensures that the resources needed for innovation are well managed and secure. Today, we will discuss the pitfalls of inadequate bookkeeping, exploring the critical role of bookkeeping in avoiding common operational pitfalls. We will use the recent FTX fraud case to highlight the severe consequences of inadequate financial management. FTX, a leading cryptocurrency exchange, committed accounting fraud by presenting false financial statements and misusing customer funds for operational expenses. Weak internal controls and governance allowed these activities to go undetected for an extended period. Regulatory evasion and market manipulation further compounded the severity of the fraud. The scandal resulted in FTX's bankruptcy, legal actions against key executives, and a 25-year prison sentence for CEO and founder Sam Bankman-Fried. While this was a case of fraud, the lack of good financial practices and controls can trip up any entrepreneur. A company owner can learn the critical importance of implementing robust internal controls to prevent misuse of funds and ensure transparency. I want to give an overview of FTX's fraud from a bookkeeper's perspective. There were a number of accounting issues with FTX, which, if discovered early, would have cast doubt on their financial management. The first issue, diversion of customer assets. FTX used customer funds to cover operational expenses and investment losses. The proper practice is customer funds should be segregated from the company's operational funds and should only be used for their intended purposes. Accurate records must be maintained to ensure customer funds are not misappropriated. Think of a law firm handling the sale of a house. As part of the sale, a 20% down payment is given to the law firm to hold in escrow until the property is sold. The 20% down payment is not income to the law firm. They cannot use the funds for their own operational expenses. If a firm is found to be misusing escrow funds, it can result in fines, criminal charges, and possible disbarment for the law firm. A bookkeeper for a law firm would have to understand segregation of funds and accurate categorizing of escrow funds. The next issue, lack of oversight and internal controls. FTX had weak internal controls and insufficient oversight mechanisms, allowing fraudulent activities to go undetected. The proper practice is to implement robust internal controls, including regular audits, checks and balances, and segregation of duties. Regular internal and external audits should be conducted to ensure compliance and detect any discrepancies early on. Bills and payments is an important area for internal controls and segregation of duties. A project manager who approves bills should not also have check writing authority. If not the owner of the company themselves, there should at least be someone in management higher than the project manager who has final authority to review the bill and sign the check authorizing final payment. This additional level of oversight is meant to maintain accuracy and compliance. The next issue, false financial statements. FTX created and presented false financial statements that overstated its profitability, asset holdings, and overall financial health. Financial statements should be prepared accurately and honestly, reflecting the true financial position of the company. All entries should be supported by verifiable documentation and follow generally accepted accounting principles, also known as GAAP. While the financial statements were purposely overstated by FTX, many firms without proper bookkeeping support will have incorrect financial statements. I have seen loan payments recorded as an expense, reducing the net income of the profit and loss statement. only the interest portion of the loan payment is considered an expense. The amount of the payment going towards the principal balance of the loan is meant to reduce the liability of the loan on the balance sheet. For example, a $100 payment, let's say $80 is principal, $20 is interest. Only $20 should be recorded as an expense on the profit and loss statement. The $80 principal reduces the loan liability amount on the balance sheet. The last, and perhaps the most severe issue, inadequate audit procedures. The audit firm that reviewed FTX's financial statements failed to identify significant irregularities and fraudulent activities. They overlooked or just didn't adequately investigate the inflated asset values and misrepresentation of financial health. The proper practice: auditors should perform rigorous and comprehensive audit procedures, including detailed verification of asset values, examination of supporting documentation, and an assessment of internal controls. They should investigate any anomalies or inconsistencies. While not a bookkeeping practice, an audit should be the final say-so in whether a company's bookkeeping and financial statements are accurate. In a normal audit, the bookkeeping team is exchanging reports and documents with the audit firm to substantiate the accounting records. The documents exchanged could be contracts, bank statements, invoices to clients, bills from vendors, and a written document explaining the segregation of financial duties. A proper audit could take weeks or months to complete, as the audit is supposed to verify all information submitted against the accounting records for accuracy. The auditor will provide an audit report detailing findings and/or recommendations, if any. If the findings are clean, then the accounting records are in accordance with the generally accepted accounting principles. This finding is great for investor confidence and could be the tipping point in receiving investment. If recommendations have been made in the audit report, the company should make the necessary changes. While FTX seems to be a case of intentional fraud, bad bookkeeping in general can have severe financial consequences. Constant assessing of your financial reports and controls can help you to avoid these consequences. Regular and independent audits are ideal to detect and address potential issues early. Now that we've discussed the accounting issues, let's explore best practices to avoid them. First, accurate data entry and categorization. The key practice is to ensure every financial transaction is recorded precisely and categorized correctly in your accounting software. The operational impact of accurate data entry and categorization: it leads to reliable financial reporting and strategic decision-making. The accuracy is vital for business owners to make informed decisions and manage projects and project income effectively. Bank and credit card reconciliations. This is the practice of regularly comparing your transactions in your accounting system to your bank and credit card statements at the end of any given period. The operational impact is performing these reconciliations monthly helps identify discrepancies, maintain accurate records, and understand cash flow. Staying on top of reconciliations ensures you have a clear and accurate picture of your cash flow and overall financial health. The next practice is the implementation of internal controls. This is establishing checks and balances, clear protocols, and delegating responsibilities within your financial processes. The impact is internal controls safeguard your business assets, it helps to prevent fraud, and it ensures the integrity of your financial data. For instance, requiring dual approvals for expenses over a certain amount can prevent unauthorized spending and encourage accountability within your team. And last, but certainly not least, professional services. Outsourcing your financial management to a team of experts, bookkeepers, CFOs, CPAs, and those that specialize in handling complex financial landscapes. The impact is professional services manage financial intricacies, provide strategic insights, and ensure compliance, allowing business owners to focus on their core responsibilities. For business owners, leveraging professional services can transform bookkeeping from a chore into a strategic asset. The lessons from the FTX fraud case highlight the severe consequences of inadequate financial management. It's time to reassess your bookkeeping strategies to protect and enhance your financial management and business capital. If you're unsure about the effectiveness of your current bookkeeping practices, or if you're just looking for ways to streamline your financial management, we're here to help. We invite you to schedule a discovery call at proprojectbooks.com. During this call, we can explore your current financial management challenges and discuss how our services can help turn your bookkeeping into a powerful tool for growth. You can also subscribe to our podcast for bookkeeping and financial management strategies. Follow us on Instagram at proprojectbooks for more episodes and essential insights into bookkeeping and project accounting. We're also on the lookout for financial and business experts to join us on the podcast as guests. If you have insights or experiences that can benefit our audience, please reach out to engage@proprojectbooks.com or DM us on Instagram at proprojectbooks. We'd love to have you share your knowledge on a future episode. Thank you for tuning in to this episode of the Pro Project Books podcast. We look forward to having you with us again next time. Until then, keep your projects profitable and your reports insightful.